Well, after US stocks closed off their best month since 2023, with the S&P 500 up 6.2% and the Nasdaq Composite up about 9.5%, while the Aussie market struggled up with a just 3.8% gain. Gains could now be cut short this week because we've got Trump accusing China of violating its agreement, saying, "So much for Mr. Nice Guy." Welcome to the Daily. My name's Jessica Amir, a market strategist here with Mumu. It's great to have your company on this second day of June. Today is Monday. Although market volatility, the fear index, yes, it's calmed, and that could support shares. But don't be surprised if the market gets spooked this week and falls. If we also see US jobs data this week, weaker perhaps than expected, it could exaggerate the market sell-off. Now, if a sell-off does occur, even though the US share market is not back at its record all-time high, do keep in mind that stocks have generally and historically always recovered from a downturn or a market crash. And right now we've got three major factors supporting markets. Let's just cover off on those. Firstly, investors are buying the dip into what is called the taco trade. Now, this is the belief that high US tariffs are unlikely to stick because Trump always chickens out, with the former businessman essentially only using tariffs as a negotiation tool. Secondly, what is also supporting markets is earnings. Earnings results from US companies in the first quarter were far stronger than expected, and company outlooks are positive too. That supports the share market. Remember, we just had Nvidia, one of the strongest results from earnings season in the large cap space, and that supported Nvidia shares. We've seen their shares rally 53% up off that April 7 low. But over the last 2 days, investors are taking profits off the table after their results came out far better than expected. Now, thirdly, what else is supporting the markets? Record spending on AI. Businesses are expected to spend $1.8 trillion on artificial intelligence, the build out for hardware and software right through to 2032. So there's plenty supporting the markets should markets see a hiccup. That's basically what we're saying. Let's move on to Australia, what you need to focus on. This week, we're probably going to get a handle on how much our central bank, the Reserve Bank of Australia, may need to step in. We get GDP data, essentially how much is Australia making in income, and we also get Australian trade figures. They'll be released. Now, local traders will kick off the week probably defensively. We'll be looking to top up US dollar exposure and gold stocks as well, and gold exposures which are rising. So keep an eye on gold stocks such as Genesis Minerals, which is up 91% this year. Another gold stock that's doing really well this year is Evolution Mining. It's up about 86%. So they're some of the best performers this year on the ASX. As for other shares, you might expect some profit taking perhaps, because we are looking at the US futures right now and they are inching lower. Do keep in mind, ladies and gentlemen, that June is, of course, notoriously a somewhat negative month for the Aussie share market. This is where investors usually look at their portfolios. They're basically getting to rebalance their investment portfolios. And what I mean by that is in June, we traditionally see investors sell their losers, as in stocks that have lost the most across the financial year. They look to sell them, to claim them as a loss, to claim a tax write-off against the cracking gains or profits that they've made before the financial year closes. And remember, that's June 30. Also, do keep in mind, July is traditionally the best month for the Aussie share market. Over the last 10 years, the Aussie share market has gained 2.9% in July on average. So it's not something many people, I suspect, would want to miss out on. Thank you very much for your company. We'll be joining you tomorrow. Looking forward to seeing you then.